Hi everyone, Adam Bergman here, tax attorney and founder of IRA Financial. And on today's Adam Live, the ultimate Roth conversion strategy for 2022. So I actually got a lot of emails over the last 3 to 4 weeks, I would say, from a bunch of clients, some subscribers from YouTube saying, hey Adam, you need to do a Roth conversion video. I'm getting clobbered in the markets, whether it's stocks, cryptos, and I need you to explain to me what I can do from a Roth conversion standpoint, because there must be something I can do. There must be a silver lining, right? There's always some type of light that shines bright in difficult situations. And the answer is, yeah, there is actually a lot we can all do, because this market is impacting all of us. Okay, and I'm going to go through some numbers now, because in this case, the numbers don't lie. It's really a bloodbath out there. So as of today, June 22nd, 2022, year to date, S&P 500 is down 22%, Dow's down 17%, Nasdaq's down 30%, Apple's down 23%, Google's down 25%, Netflix down 71%. It seems like I own all those. But Exxon, a lot of the oil companies, Exxon's up 39%, Halliburton's up 31%. So oil obviously is up with the situation in Ukraine and some of the other pressures around the world. Oil has been the bright spot in this very, very weak marketplace. Let's talk about cryptos if you even want to get more depressed. Bitcoin's down 29% in the last 30 days. It's 55% year to date down. Ethereum is down 34% in the last 30 days, down 70% year to date. Litecoin down 24% in the last 30 days, 64% down year to date. Shiba down 12% in the last 30 days. Doge down 24% in the last 30 days. Polygon, my favorite, down 36% in the last 30 days. And I'm just going to say it, down 83% year to date. I know, it's a killer. Gold's flat. It's actually like down 0.4%. And silver is actually down 8%. Okay, so other than oil stocks, nothing is doing well in this marketplace. Now, what about real estate? Well, real estate has, up until a couple months ago, been the lone bright spot in 2022. But what is happening with real estate? So real estate isn't crashing as of yet, but there's probably some type of hangover based off the unsustainable high growth over the last 2 years, right? Most jurisdictions, real estate's been up at least 40% over the last few years. What's happening since then, right? Mortgage rates have gone up. Interest rates are going up. Mortgage rates are going up, okay? The higher cost of financing a home has basically changed the calculations for a lot of home buyers, right? Which has caused less and less, buyers in the marketplace. But there's a shift going on in the housing market, and we've seen it. Okay, demand has been reduced, whether it's from higher interest rates, whether it's the fact that people think the real estate market's coming down, whether it's because the stock market and crypto market's down and people don't feel as rich, don't feel they have enough assets to go out and buy a home or trade up, or maybe don't have as much security in their job. Whatever the case may be, all those factors are aligning to suggest that the real estate market is in place for a potential slowdown. So I'm going to give you some numbers. Year-over-year home sales have been dropping in the recent months. In a Fannie Mae survey on home buyer sentiment, a record 79% of respondents said it's a bad time to buy a home. So will prices drop in the near future? Inventory is going up, okay? In May, the inventory started moving in a different direction. This is according to Realtor.com. And we saw active listings up 13% from last year. Prices dropping, prices cuts were seen in 10.5% of homes in May. That is up from 6.2% in May last year. Okay, the share of homes with price reductions is higher now, but May share is still lower than every May going back to 2020 to 2017. So it's dropping as of 2018 to 2021, but it's still higher than it was in 2017. Mortgage applications are way down. as mortgage rates have spiked, would-be home buyers are applying for fewer loans. In the week ending June 10th, this is interesting, mortgage purchase applications were down 16% from a year earlier. And this is according to the Mortgage Bankers Association. Okay, and even purchase applications were down compared to last year. There's less buyers. Okay, 14% year over during the week ending June 12th. It's the 9th consecutive week of declines in the index. So we can see what's going on in the stock market. We've seen what's going on in the crypto market. Other than oil and gold, nothing's up. What's the next chip that's going to take a tumble? And it's probably real estate. Now, it could be healthy, right? We've seen price increases of 40+% in the last few years. It's hurt opportunities for investors. It's hurt first-time home buyers. So it could be a healthy reduction. Will we see it go down 30, 40, 50%? Probably not, but 10 to 15, 20% decline could be healthy. So what does this all matter? Why am I talking about all this when it involves Roth conversions? Well, let's start with the assets that are already down, and then we'll trickle down to real estate. So like all of you, I'm in a situation where I look at my stock portfolio, my crypto portfolio, and it's ugly. Okay, but as I said, every silver lining, every bad situation has a silver lining. It's going to throw a Grateful Dead phrase in there. Every silver lining's got a touch of gray, but it's actually maybe a touch of sunshine. When things go really, really down quick, and it's in a retirement account and in a pre-tax IRA or 401k, you can do what's called a Roth conversion. And what a Roth conversion is you pay tax on the fair market value of the asset you're converting. So if you bought Bitcoin at 60,000 and now it's at 20, and you have 2 Bitcoins, so now instead of being worth 120,000, it's worth 40,000, you pay tax on that 40,000 value, not that 120,000. So yes, you're paid ordinary income tax, but you lock in the price at this depressed value. So you pay tax at a depressed value, and the whole idea is that, hey, over the long period of time, over the next 5, 10, 15 years, Bitcoin or Apple or Google or Netflix is going to go back up. And now I've paid tax at a lower value. And now so long as I'm over 59 and a half and the Roth's been open at least 5 years, it's all tax free. That's the advantage of a Roth conversion, is you get your assets into Roth. What's a Roth IRA or a Roth 401k? It's an after-tax account, which means when you take a Roth distribution, so long as it's qualified, meaning the Roth's been open at least 5 years and you are over the age of 59 and a half, you will not pay any tax on that distribution. Whereas if that asset was still in a pre-tax IRA, you'd be subject to tax and potentially, if you're under 59 and a half, a 10% early distribution penalty. But if you're over 59 and a half, tax, ordinary income tax, right? So the whole strategy is, hey, the idea, let's get all our assets into a Roth. Let's take this opportunity when the market sucks, assets are down, assets that we like, whether it's Apple, Google, Bitcoin, Ethereum, assets that we really like, we really expect will eventually go up, whether it's next year, 3 years, 7 years, 12 years down the road. Let's lock in tax at a very, very low rate, which we think is low, right? Yes, you may be watching and say, well, Adam, Bitcoin can drop more, Ethereum could drop more, Netflix could drop more, maybe Google could drop more. Okay, maybe. No one, whether you're Warren Buffett or anyone else, can time a market, right? But you have to be comfortable with pricing. So I look at Netflix, and I think down 70% is probably the bottom, probably the floor. Is this the floor of Bitcoin? I don't know. It's certainly possible it goes down more. I think probably 12, 13,000 is the floor in my estimation, but who knows? Could drop even further. So you don't know, but you take the educated assumption that, hey, I'm comfortable with paying tax at Bitcoin at 20 because it's in an IRA. I'm a long-term investor. I believe in the long-term growth of Facebook or Twitter or Tesla or Netflix or Bitcoin or Ethereum, and I'm going to take the chance. I'm going to lock in value today. I'm going to pay ordinary income tax on today's value. What is the tax rate? Well, whatever you convert is added to all the other income you have, and it's aggregated together on your 1040. And then whatever that net income is, that's what you pay tax on based off your tax rate. So you may have NOLs, maybe you have losses, business losses, other losses from prior years that you can use to offset these potential gains, right? You can always use $3,000 of capital losses to offset ordinary income. So we're all going to have capital losses this year. So you know you can at least use $3,000 of those capital losses to offset ordinary income. But you may have also business losses, whether they're NOLs or pass-through losses from LLC business that you can potentially use to offset any tax you'll pay on a Roth conversion. So that's the ultimate Roth strategy. The ultimate conversion strategy is take advantage of these opportunities. I remember back in 08, 09, when I was first getting into this business, how many clients of mine did conversions on real estate. So the stock market tanked for a month and a half, 2 months, right? From like November 08 till the beginning of January 09. But then the market kind of spiked and took off. And actually 09 was a really good year in the markets. So it was a very, very short window to take advantage of Roth conversions at the end of 08. But real estate, there was a longer window. Real estates came, the prices dropped and they stayed down for many years. So looking back, I spoke to someone who had 30 or 40 homes in Alabama. And he was down 30, 40% on these homes. He really didn't care because at that time he was in his 50s. They were income producing. So yeah, the values dropped, but he was still getting really good rental income from his renters. And he did Roth conversions on a whole boatload of those assets. And at that point, the IRS actually had an opportunity where you can pay tax over a 2-year period if you do conversions. We'll see if they bring that back. It depends on inflation, depends on the recession, what position Treasury is in terms of needing money. But encouraging people to do Roth conversions is a popular motive and trick the IRS uses to generate more tax revenue. So that is a possibility that they could employ again. But even if they don't, the ability on equities or cryptos, because real estate hasn't dropped as much yet as it has in 08, but we know equities and cryptos have already. So this is probably a really good opportunity to take advantage of Roth conversion options, where you can say, okay, I bought in over here. It's now dropped 30, 40, 50, 60%. I'm going to pay tax at this price. I'm going to tell my IRA custodian that I want to do a Roth conversion at this price. They will issue a 1099-R to the IRS. And then next year on April 15th, I'll pay tax at a tax rate based off where my other net income is, my other W-2 and potentially other deductions and losses I have that may be able to minimize my ordinary income. So again, just to be clear, when you do a Roth conversion, it's not capital gains you pay on, it's ordinary income tax rate you pay on your conversion. But the play is once you lock it into a Roth and you're comfortable that you're going to be able to stick in that Roth until you're 59 and a half, or the Roth's been open at least 5 years. And obviously you have faith in what the underlying asset is, right? If you're doing Roth conversions on, maybe like Iraqi dinars or Zimbabwe currency, maybe you don't have a lot of faith and maybe it's not the best decision. But for assets like Netflix or Google or Apple or maybe even Bitcoin, where there's probably a strong chance that that asset will at some point in the next 3, 5, 10 years go up in value, it could make a lot of sense, right? Especially if you have losses to offset some of that other income. Now, if you're over 59 and a half, one thing to mention, and you do a Roth conversion, you still have to wait 5 years to pull the converted amount out, okay? Because the Roth conversion has a separate 5-year track. Even if you're over 59 and a half and, well, actually, let me rephrase that. If you're under 59 and a half, you still have to wait to your 59 and a half to pull that money out. If you're over 59 and a half and you do a conversion, you still also have to wait the 5 years to pull out. Where if you made Roth contributions, you'd be able to pull those contributions out anytime, either if you're under or over 59 and a half. But once you're over 59 and a half and you do a conversion, you still have to wait the 5 years to mature the conversion. Okay, so it's something to keep in mind. Conversions have different rules when it comes to conversions over contributions. What else you should know? If you have a solo 401k and you do a conversion, you have a little bit more flexibility from a time perspective, because when you do a conversion from an IRA, you have to let the IRA know and the IRA custodian know, and then your value will be locked in at that date. Okay, so if you want to convert Bitcoin or Facebook stock at today's price, you'll provide that information to the custodian, and then the 1099-R will be locked into that price. If you're a solo 401k, you generally are the trustee and the administrator. You are essentially the ones responsible for issuing the 1099. So I generally recommend my clients, they do like some type of statement to file, some type of signed statement that their intention is to do an in-kind conversion of the asset on this date, okay, at this particular time. If it's something like equities or currency, that could fluctuate somewhat during the day, and then you obviously want to process that by shifting the name of the account, if you can, into a Roth, or indicating in some way that you've made the conversion. But again, as the trustee, you're the one that issues the 1099-R and the one that reports the value. So there is somewhat more flexibility. New IRS rules suggest that once you do a conversion, you're locked in. Old rules where you had until 12/31 to retroactively kind of discount that conversion and essentially retroactively eliminate it. You can't do it anymore. Once you elect to do a conversion, you're stuck. But with a solo K, it's just you, right? You're the trustee and you're the plan administrator. Fidelity, Schwab, they don't have any reporting requirements. Yes, you can have them change the name of the account to Roth, but ultimately you're the one that has to file the 5500 EZ with the IRS. So it'd be up to you to report that on the 1099-R, and obviously you want to be truthful, but you still do have a little bit more flexibility than you would in a Roth IRA, where the custodian does all the reporting vis-a-vis the 5498. So what are some things that can go wrong, right? I talked about all the advantages of doing conversions. You lock in your gains at hopefully a low value. You hopefully have patience, and now you can watch that asset grow in the future. And so long as you're over 59 and a half, the Roth's been open at least 5 years, you can take advantage of tax-free Roth IRA distributions to just pull the money out anytime you want tax-free, which is obviously amazing. What can go wrong? Well, I talked about it, right? Let's say Bitcoin goes to zero, right? Remember Enron, remember Lehman Brothers, Bear Stearns. You never know when that floor is. The floor ultimately is zero, right? We look at Netflix, it dropped 70%. We look at Bitcoin, that's dropped 55% year to date. We look at Litecoin, that's dropped 64%. Even my old favorite Matic, Polygon, that's down 80%. You feel like, hey, this is pretty close to the bottom, right? But no, the bottom could be zero. It could be zero. So that's the risk, right? You do a Roth conversion today of Netflix, and then whatever, it goes to zero, or Bitcoin goes to zero. Is it likely? No, right? These assets always have some value. Some would argue, Netflix clearly has more value than cryptocurrency, which is has no underlying asset that's pushing its value up. Where Netflix has subscribers, that's revenue, is recurring revenue, is a balance sheet, that has potentially EBITDA. Cryptos doesn't, right? There's no balance sheet. There's nothing behind it. It's technology. It's blockchain. It's hope. Maybe limited supply in the case of Bitcoin, but otherwise, no, right? There's no balance sheet, no EBITDA. So yeah, technically it could go to zero. It could. So will it go to zero? I don't know, but that is the floor. Whereas real estate probably doesn't have a floor of zero. As I mentioned, Netflix doesn't have a floor of zero. There's always someone that will come in and scoop up those assets for some value. It may not be the value converted at, but it probably won't be zero. Now, what about real estate? Should you be doing Roth conversions in real estate today? Obviously, no one can time the market. No one can do it. Okay, so is it a good time? Some people will argue probably not, right? As suggested by some of the facts I shared with you, real estate has some room potentially to go down. Rates likely will keep going up. Interest rates will keep going up. That means probably less buyers in the marketplace. Maybe more sellers will feel the pinch of a falling stock market, falling crypto market, and they just may be forced into selling some assets because they either have margin calls or they just don't have the capacity to keep maybe a second home, third home, or maybe they want to downsize now. Right? We forgot about the risk of potential recession, stagflation, where you have inflation and stagnation because of job losses. That's potential, right? We don't know. I hope not. I hope this is kind of a short window and things bounce back very quickly, but we don't know. Okay, we've seen crypto companies, we've seen even tech companies like Tesla have hiring freezes. We've heard huge layoffs for a lot of these large fintech companies. A lot of crypto companies have laid off 10, 20, 30% of their workforce. Will that trickle down to companies like Apple? Facebook has potential hiring freeze. So does Twitter. Will this go into manufacturing and other industries? We don't know. Okay, so I think a lot of people may be looking to hold cash. Maybe they want to liquidate assets. They want to have more flexibility. They want to hold more cash. So you could potentially see more sellers in the marketplace, maybe less buyers, prices start dropping. It's conceivable that real estate will drop 10 to 30% in the next 6 to 8 months. So I, personally have some real estate assets. I don't have them in a pre-tax IRA. If I did, I'd probably hold off doing conversions. But I've already converted all my equities and cryptos into Roth. So if I didn't, I would be jumping on conversions. Personally, I'm not giving anyone any tax advice, any investment advice. Just personally, as a tax lawyer, someone who values being in a Roth IRA, if I had Netflix pre-tax or cryptos pre-tax, I would strongly be considering doing conversions. Because again, I don't know if I can ever 100% call when the floor will happen, but we're probably quite close. I don't see Bitcoin going under 12, 13,000. It could, but I just don't see it happening. Ethereum's hovered around 1,000, it's 1,100. Yeah, Ethereum could go down to maybe 700, 800. I don't see it dropping more. Polygon's at 40 cents. Can't see it dropping much more than that. But hey, I've been wrong before. People didn't see real estate dropping in 08 to the extent it did. So no one really knows. It's hard to time the market. So the point of today's video is to just get you thinking. It's all about issue spotting. Say, hey, I have these equities, these cryptos in maybe private placements, right? What's going to happen now is if you own private equity, hedge funds, some private placement investments, they're going to start marking to market. Second quarter is coming to an end in a couple of weeks. You're going to start getting statements if you're in a fund that market to market, and those funds could drop 20, 30, 40% in value. And if that happens, again, the silver lining is, hey, if you believe in this investment, this could be a really, really good way of locking in a lower value and converting this asset from pre-tax to Roth. Now, yeah, the reckoning comes. You do have to pay the tax on April 15th next year on the value you converted. You do have some time. It's only June, or end of June. So you do have some time to worry about how you're going to pay for it. And maybe you'll have losses that could reduce the tax liability, but it is ordinary income tax. It gets added to the other income you have under 1040. So you got to kind of make sure that you have enough, the ability to pay that, and or just kind of thinking about that down the road, that will happen. But otherwise, this is the silver lining of a really, really difficult investment marketplace. There's really nothing up other than oil stocks and gold, which it's not even up. It's down actually year to date a little bit, but there's no safe haven other than a few equities. So it's been rough. It's not a great period. A lot of people are not only just worried about their investments. They're also worried about the macro function of the economy. Are we dealing with recession? Inflation sucks. We all pump gas in our car every week. We all have to deal with going out for dinner and paying. I went out with my wife for lunch in Miami a couple days ago. It's $52. I just told my friend. I had an egg burrito. My wife had an omelet and a green drink. It was $52. I had water. I didn't even have coffee. Okay, so prices are out of control. This wasn't like a fancy lunch. I was in shorts and a t-shirt. It was at a local cafe. Prices are out of control. Rents are going up, and it could be a challenging time. But again, as a retirement investor, I've seen it in 08, 09. I have hundreds, not thousands of clients that are still talking about that amazing opportunity 08, 09 presented, where not only were they able to pick up really cheap real estate assets, they're able to do conversions at ridiculously low valuations. And now that they're over 59.5, they're literally living off those assets because they're in a Roth. The rental income is just cash flow that they're living off. It's all in a Roth. They don't have to take required minimum distributions when they're over 72. They could pass it to a spouse on their death. The spouse could live off that income, no RMDs, and never pay tax on that income. So it's a really unbelievable opportunity. I know I'm saying I'm sprinkling in some sunshine in a really crappy marketplace. It's what I got to do, right? I try to look for the silver lining in everything and try to be a contrarian investor. When things are going down, you want to look for opportunities to make money on those investments. And as a tax lawyer, I still think the Roth IRA is the ultimate tax strategy out there. It's the best legal way to shelter income. And today, where we're at in a asset standpoint, whether it's equity, cryptos, and ultimately, I think real estate will present opportunities as well. This is a really good time. Okay, so that's how I want to leave it. Obviously, I'm not telling anyone to just do conversions. I don't know where those assets will go, but personally, I do think there's lots of opportunities to jump into Roth conversions. If you're a client of IRA Financial, we don't charge for conversions. So you can go pre-tax to Roth. We're not going to charge you for a new account. We don't even have wire fees, transaction fees, asset valuation fees. If you are watching this and you're kind of thinking about ultimately doing an IRA because you want to take advantage of opportunities, it's a good opportunity to start. We don't charge you anything to get started. The only time you pay our fees is when you fund the account. So you can set up an IRA on our app, even an LLC. You don't pay anything until you fund it. So if you say, you know what, I'm going to set up today, I'm going to go through the process, get everything set up, and I'll fund the account in 3 weeks, 3 months, whenever it is. When I start seeing opportunities, you can do it. We don't charge you anything until you fund. So you really have nothing to lose to just sign up, open an account. Even if it sits dormant, we're not going to close it down. There's no minimum balance. And again, we don't charge you anything until you fund your account. So there's really nothing to lose. And this way, you'll have everything set up. You'll just need to roll the money in and bang. As a cash investor, trust me, you'll have an advantage over other investors who want to jump on really good, attractive investments, whether it's real estate, private placements, cryptos, whatever it is. You'll have the cash. You'll be ready to go. And hopefully when assets start rising again, you'll be ready to go and have the firepower you need to take advantage of it. So there you go. I really appreciate you guys spending some time with me today. Thank you for watching. If you haven't subscribed to this channel yet, what are you waiting for? Do it. You tend to go live every Wednesday at noon Eastern Standard Time, but if you're busy and got other things going on, don't worry. You'll get notified when I go live, and you can check out the video anytime. We also drop 3 podcasts and 4 to 5 videos a week. So if you are in the self-directed retirement world, really interested in content, want to become a better investor, learn more, this is your place. We really spend a lot of effort on giving you the best content we can. I spend most of my time researching, doing videos, podcasts, writing blogs. So I try to keep things fresh. I just did a podcast today on new Senate bill, which should be part of new retirement legislation that will be signed by the president this year, called Secure Act 2.0. Some really cool stuff on it. It's on the Adam Talks podcast. So I suggest people check it out. We also post it on YouTube. So you can always just watch it on YouTube anytime you want. So always fresh content coming in, and pretty good stuff. So otherwise, again, thank you for spending some time with me today. I hope you guys have a great day, and talk to everyone again soon. Take care.